Hey guys, welcome to Invest Crest. So I'm sure there are many people who have advised you to not enter the stock market due to it being a gamble or always making losses. Firstly, I don't believe it and you shouldn't either. Do your own research and then invest in the market. But then why do people lose money? That's what we'll be talking about in this video. So make sure you smash that like button so that this video reaches more people and it helps out with the YouTube algorithm. There are timestamps in the description about which loss I'll be talking about, whether it's in the stock market as investing or with stock trading. So make sure you check that out to see what you're looking for. So first, why do people lose money when investing in the market? Firstly, it's because they don't do proper research. Now, many people lose money in stocks, but that doesn't mean you'll only lose money in the market. That's why there's diversification. If you don't research and buy stocks thinking you're always going to be right, then you're taking a very high risk. Even Warren Buffett has lost money in the market. You shouldn't buy a stock just because someone else tells you it's good. You should always do your own research about its business, how it makes money, what are the company's plans for the future, and then make a decision. The second reason why people lose money in the market is because they don't have enough patience. You should always have patience. Don't buy a stock and look at it every 10 seconds and then panic about the ups and downs in the market. There's a saying, the market pays premium to those who have patience, and it has been proved over the course of history. The third reason why people lose money in the market is because they invest in lump sums. Try invest using SIPs, that is a systematic investment plan. Do this instead of investing in lump sums, as if you put all your money at once and the market goes down, you'll incur a lot of loss and end up blaming the market, even though it was your own fault. Now, how does one lose money trading stocks? Say you buy a stock for $50, which means $50 is at risk. But why is it at risk? Now you've invested $50 in a market, and a market is made of many people. There are buyers and there are sellers. There's you and there's the other people in the market as well who are part of it. Now you put $50 on a stock ABC. The other people in the market need to see this stock as positively as you do, which means there should be someone who is willing to buy the stock for at least $50.01. So you at least make a penny of profit. If someone wants to pay $51, then hopefully you make a $1 profit. But there's also a flip side to this. What if the market says they only want to pay $49.90? You bought it for 50, so that means that's a difference of $0.10. What if they only want to pay $40 for it? So that means you're making a $10 loss. So now you're losing $10 because the market says that the stock is only worth 40 and not $50. Now, why is that worth $40? It's because the people are only willing to pay 40. The people decide the worth. Now, what if nobody wants to buy the stock? Meaning nobody is willing to even touch the stock or pay $0 for it. Now, obviously, this doesn't happen, but if you think about it in terms of making major losses, that's often possible when you're day trading. And hence, day trading is a more risky approach to the stock market, and this is where most people lose money. I believe growth and value investing is the way to go. So guys, thank you for watching this small video about why and how people may lose money in the market. If you like the video, make sure you hit that like button and subscribe for more such content.